Hello, Uncle Jim here. Today I have two great stocks for you. These are companies that have very little debt or no debt, pay good dividends, and really are good companies for selling options on. Today I want to share with you how I found them, and I also want to go into detail about the trades I made on them. They're a little bit different than previous trades, so stay tuned. I think you're really going to enjoy what I have for you. Okay, let's go ahead and get started. I do like to give a quick market update. The Fed spoke yesterday, and it sounds like they're going to keep rates about the same. There's probably not going to be any cuts or any increases anytime soon, which I think is a good thing. I think that's partially why the market really has reacted nicely. I believe it's up quite a bit today. Are we done with kind of a topsy-turvy market? I don't think so. I think we're going to continue to have some good days and some bad days, and there'll be opportunities, especially great opportunities for option sellers. So, and again, when we have a down day, it'll be great for selling puts, and when we have an up day, it'll be really good for calls. And I see that going on for a while, probably even through the first quarter, because we'll probably be in a recession the first quarter. So that's enough about the markets. I'm just happy to see us in somewhat of a recovery now, and the market's up quite a bit today. I think the Dow's over 400 points, and I think all the indexes are up. Even the Russell 2000 is up quite a bit. So it's nice to see that. A lot of my positions that were in the money are now out of the money or not very deep in the money anymore, which is a relief. I had quite a bit that were in the money with the recent market downturn or correction that we've had over the past couple of months. So that's enough about the markets. Let's jump into the main part of this video. So what's key for me with my trading is finding the best companies I can possibly find. I like to use certain criteria. I like to pick up companies that are kind of on a discount, and I believe there are a lot of companies out there that are majorly discounted. Today I'm going to share with you two. They're both fairly close to their 52-week low or at their 52-week low. They both pay good dividends. They also have no debt or low debt, which again is very important to me. And they both have fairly good growth year over year. And those are the primary criteria. I'll go into a bit more detail at the end of the video when I jump into the specifics about each company. So I'll share with you the details about their dividends, what's their payout ratio, where they stand at this juncture with, potential year over year growth next year. Will they have a major downturn or not? So we'll go into more of that detail at the very end of the video. So I encourage you to, stay tuned for that part too. And I'll also go over the trades. There were two different trades. They were both cash secured puts. They were both higher risk than typical. I typically like to do a 15 delta for my puts, but for these I did higher. I did more like a 30 or 35 delta because I am truly running the wheel on them, and my goal is to pick up some nice cash on the front end, and then once they're assigned to me, to sell covered calls, and between both those do quite well. So it's a little bit of a different strategy than I've done in the past. Primarily because these are trades that are in what I'm calling my new Fidelity account. This is the account that I rolled from a 401k, and I'm keeping it at Fidelity to look at the higher interest rate that they pay. And I'm hoping to verify that within the next day or two. Everyone's assured me. I've had lots of subscribers, and I've had members say, yeah, you're going to get that 5% on any cash you have in your accounts, but I want to see it. I want to actually see it get deposited in my account, and I believe that'll happen either tomorrow or early next week. So, and I'll share that in a future video. So you may ask, well, why am I doing this a little bit different? Since when I rolled everything, I did not keep any of the funds, so it's a perfect time to do cash secured puts. I've got, it's a fairly big account. It's over 200,000. So I'm doing a majority of my puts as cash secured puts. I'm still doing some vertical put credit spreads, but very few. Most of them are cash secured puts. And like I said before, I am taking more risk, like a 35 or 40 delta. I'm sticking to shorter expirations. I'm trying not to go out any farther than 90 days. Most of them are within 60 days, so they've because of that, have had a really good return. And then, my hope is once they are assigned to me, I can then turn around and start selling covered calls on them and really do the wheel. If you're not familiar with the wheel, it works where you first sell a put with the intention of it being assigned to you. Then once it's assigned to you, you can then sell a call. Now, the only thing I do different than a lot of people is I may take less risk on the call because I want to own both these stocks indefinitely, probably the rest of my life, and leave them to my son at some point where he'll inherit them when I pass. So, so it works out nicely, because then I can not just, run the wheel, I can also earn the dividends. So long term, I would sell covered calls on these as well as earn the dividends. And I've been able to double most of my covered call earnings, which works out really well. So if it's earning a 5.5% dividend, which one of these companies is, you're talking 10, 11% just on that one company on a yearly basis, which for me has given me the financial freedom that, where I can do what I want to do when I want to do it. The old FU kind of money, if you get my drift, which is a world of difference. So I'm not going to go into any more detail. I think the next part of this video will work out a little better where I can actually show you what I'm talking about. So stay tuned. We'll jump into the next part of the video. Also, as always, please subscribe, hit that like button. If you're curious about my memberships, take a look below. I've had a lot of people join recently and have had some really good discussions. So take a look. It's probably very well worth your while. So let's jump into the next part of the video. Okay, the first stock I want to start with is BKE. This is Buckle, a really good company. They have a bunch of stores. They sell jeans and I think hats and belts and all sorts of kind of nice stuff. Each store does quite well. What I like about them is they're fairly close to the 52-week low. They've got a nice Schwab equity rating, and I believe also from Morningstar. No rating yet from Morningstar, but they've got a buy rating from CFRA. Dividends, they pay 4.17, which is nice. We can actually go in and look at their dividends. They do pay a variable dividend, which you don't see many companies doing this. You will see some oil companies do it, but at times they can be quite substantial. Like back in 21, they paid literally almost $6 in a special dividend. And then this past year, they paid $2.65. Now with the economy going south, I don't know if they're going to do it again, but they probably will. And it'll probably be as much, if not more than the regular dividend. And then if we come down here, we can see their payout ratio is a little higher than I typically like, but it's at 85%. And I think that's come up a little bit higher with sales being down a little bit in some of the stores. But over the long term, they've grown their dividends quite well. So a 4% dividend, and I found you can double the dividend with covered calls, selling covered calls for the premium. So, you could do 8 or 9% just selling covered calls and owning BKE. And again, the special dividends are very unique. They can be fairly large. So hopefully they, once we get into a recovery and get past, I think we're going to have a recession first quarter, but once we get past that, things could go really well. They recently beat earnings. I think they only had one miss this year, so their PE isn't through the roof. They also have a nice profit margin. And what I really like is they have no debt. Here you can see they have no debt. So those are some of the key points. I also like the fact that if you come over here, this is Seeking Alpha, and you go to earnings, and you can look at their year over year and go into more detail. Now, it does look like fourth quarter 24 will be a little bit lower. Well, not a little bit, almost 16. Looks like quarter 3 for 2024 will be good, but they're typically year over year, and especially once we get back into a recovery, these values are going to come up quite a bit. So they they're doing pretty well, even though they're going through a little bit of a rough spot with the economy. Yeah, it's interesting. Seeking Alpha doesn't give them as high a marks as I do. I like them just because they don't have any debt. But overall, a good company. And let me share with you what I actually did with them. So actually, I think they're over here. So I sold a December 15th, which was 45 days out at the time, a 3250 put, cash secured put. I brought in some good cash for it. It was higher delta. This is delta right here on the right, 3976. So that's a lot higher than I typically do with delta, but I really like this company and I do want to own it. And I tried to own them last year and I was ready to make a trade and I missed the opportunity, so I don't want to miss it this year. And then here's the actual trade. You can see it looks a little bit different. This is actually Fidelity. And like I said before, I did this trade in Fidelity. So I did sell to open. At the time, it was $33.17. I did a quantity of 2, a put, December 15, and the bid was 130, so I got pretty much the bid. And here you can see where the $1.30 fee was taken out. So I picked up $258.70. So next, if we go back, what I also like to look at is on this side for the calls. If I look at the same expiration, again, you're talking 200 to 235. Somehow I got the same thing now showing. What did I do? There we go. So the calls are really good. So if I did a 3250 call, I could bring in another almost $2, 235. So, and that's really important since I want to write covered calls on it. And typically the call premium is a bit better than the put premium. So just wanted to share this particular company and why I like it so much. Now the second company I like a lot is Best Buy. Literally, I went in Best Buy a couple days ago and bought a new laptop with my son. We first had gone to Costco and found one we liked there, and we found the same laptop at Best Buy and found a better deal at Best Buy, so we ended up buying it. And I noticed the store was more stocked than I typically have noticed before. I was really surprised, and I really like going to Best Buy and shopping. So just from a perspective of being a customer, it's one of the companies I really like. Buckle, it's got a really good rating, an A rating from Schwab. Morningstar, it's got a nice high rating on it too. The 52-week, it's definitely at the low 64.07, and it was 66.63 at this time. Actually, right now with the market up so much, it's up quite a bit. I believe it was 65 yesterday. We can look at dividends. Dividends, it's paying almost 6%, 5.58. And again, if we look at details, they've been increasing them nicely recently. You can see here significant increases, and they have a low payout ratio, a good dividend coverage ratio. And you can see the growth. They really have been growing these dividends nicely, which is really important to me because I really enjoy dividends if I can get them. And they also have been beating earnings. I think, have they already had their earnings? They still have earnings coming up towards the end of this earnings season 11/21. So it's several weeks away still for the earnings. But every quarter they've beaten earnings. Here you can see they've got good earnings growth. They've got good profit margins. And their debt is really not too bad. I mean, they've been decreasing it. Yeah, from 2021, they've been decreasing it, and it's fairly low compared to equity and total liabilities. So they have a good handle on the debt. And what I also like to look at is, again, we'll come over to Seeking Alpha. We'll look at the earnings. And this is what I really like about them. So you can see year over year, they're looking to increase 2% for fourth quarter 24, first quarter 25, 12%, 16% for second quarter 2025. And this is the piece that I've added before. I wasn't really looking at what their year over year was going to be forecasted to be. And so this is another piece that I'm looking at when I identify any, companies that I'm really interested in selling cash secured puts on. So let's actually look at the cash secured puts on these. So here it is. So I went with a 6250 for Best Buy, which was about a 35 delta. And I only did one of these, so I brought in some pretty good income, over $200, like 225, 229, something along those lines. And again, if you look over on the opposite side, you can see it's got really good premium for calls. Again, almost better than for puts. So I'm really looking forward to selling covered calls, hopefully when I get assigned the 100 shares, and then I'll turn around and start selling covered calls on it almost immediately. So, and then let's actually go to the trade itself. Here it is. Yeah, so I picked up 226 for one contract expiring December 15th. $226. And I noticed that it also had some pretty good, I could have done a vertical put credit spread and had done fairly well with it. But I decided not to, since I really want to own this. And I've got a lot of cash in this Fidelity account. Again, this is Fidelity that we're looking at. And if we come over here, here's those two trades. I'm not going to go into the rest of this spreadsheet, but you can see here's the two cash secured puts, the different deltas, the expiration. And then the yearly returns were nice. So one was almost 37% on a yearly basis, and the other is almost 32%. And again, these are cash secured puts. Now, if there were vertical put credit spreads, the returns would be even higher. And I'll probably, once I have this Fidelity account completely funded, I'll probably do a lot more vertical put credit spreads when I don't have so much cash. So that's what I wanted to share with you. At this point, with finding companies like this that pay good dividends, have very low debt, have good year over year growth, you really can't go wrong. And it's, they're companies you want to add to your portfolio, in my mind, for a lifetime. These are not companies I'm looking to constantly spin the wheel on as much. Like I said before, I'm just going to run the wheel till I own them. Then I'm going to do safer covered calls versus covered calls where I'm ensuring that they get replaced or, get assigned away from me again. So that's what I wanted to share. As always, please leave comments below if you think I should do something differently or you have a different take on this. Please leave a comment. I try to answer all my comments. So thanks for joining me, and I hope you have a great day.